Hello and welcome. In this lesson we will look at the self-assessment portion which was left previously. I told you to read it and I assume that you have already read it and we will go through together. I won't go into details. I will try to just skim through the data because you have already studied it, and this is the data which is very important as far as P6 is concerned. Because one of the keys to easily pass P6 is to focus on theory, because the more focus you do on the theory, the more likely you are going to pass the exam. Because the average, if you talk about the weighted average of the P6 exam, it's about almost 50-50 to theory and numeric. All right. The theory which you will study, which you have to focus on, is exactly the theory which is given to you in the notes. So there isn't anything else which you can study, because if you're thinking about, these notes are not sufficient because they are just small notes. We can't pass this exam just by reading these notes, because you are wrong. These notes are more than sufficient. I'm telling you, these are more than sufficient to pass this exam easily and comfortably. Even if you are looking at I have seen a student, I had a student who secured 78 marks just by reading these notes. So if you're thinking about, these notes are not sufficient enough because as compared to the textbook, these notes are not going to help you, then you're wrong. These notes are more than sufficient for you to successfully pass this exam and comfortably pass this exam. And you can even secure a position as well if you're good at it. All right. So having said that, I was talking about the importance of the theory. Theory is very important, and all the theory which will be examined in the question in the exam paper is given to you in the note. Now these notes are very small. I hope that you have seen the books of traditional textbooks of even if you're PPP or Kaplan. They are very massive books, about 1,000 pages. So they have got exactly the same data which I have just congested into the almost 90 pages. So it is exactly the same thing which will be examined in the exam paper. Now these are very important. I assume that out of these 90 pages, half of them are of calculations. So they are just pro formas. So other half, which are about 40 pages, I hope and I assume at this level you are able to absorb these 40 pages. Just make yourself notes, try to write it again and again, the theory. That's the way you can pass it, and that's the way you can easily pass it. I can guarantee you, if you're confident, if you're well at the notes, and if you've done enough practice, as I said, practice is very vital. Now only these notes are not going to help you, but this will only give you the guidance. This will only give you the way to tackle the paper and the way to tackle the exam itself. But practice is very vital. The more questions you do, the more confident you will become on the paper. I've already given you the questions of capital gains tax in the previous lesson, so please make sure you do it, and I assume that you have done it already, and try to do it in exam pressure and time pressure. So do not look at the answers before you finish the question, and after finishing the question, check the time if it is according to the time which you have allowed yourself. Then go back to the answers and try to compare it and try to mark it. Now before every answer, the exam exam marking is also given to you by the examiner, which is just copied by the PPP. So just look at the exam marking as well. How many marks have you got? So it's very easy to just mark your own paper, but please make sure try to mark it as strictly as possible. The more strictly you mark, the more confident you will become, the more stronger you will become when you go to the big day in the exam. All right. So theory is very important. To be short, theory is very important. I am saying again and again. Don't just take it easy and don't just overlook any part of the theory, because these are very short notes, and so you should just memorize these notes, and you should know the rules on fingertips. If I talk about EIS, how many employees? This many. How many investment? How can what is the minimum holding period? So you should know the rules on fingertips. So if you know the rules on the fingertips of each and every theory, each and every part of the theory, then it will be, I can guarantee you, it will be much easier for you to pass the exam. Because say for example, if there are 100 marks in the exam and 50 marks of theory, and this is exactly the theory which you have already seen, so it's not difficult to score 40 marks out of that 50 which is theory, because you can easily do that. You can even take 45 out of that. So say, having said that, say for example, if you just get 40 out of that 50 which is just the theory, which you know on the fingertips, then the extra marks which you need is only 10 marks. So out of that 50 which is of calculation, you can easily secure 10 marks. Alright, so that's the way to tackle it. As far as theory is concerned, please make sure you know the rules on the fingertips. I am saying again and again because it is very, very important as far as exam is concerned. Alright, now these were some these were some exam tips, so these which were very, very important to successfully pass the exam. Alright, now please come to the lecture notes. I will just go and share the screen with you so that you can see on your screen as well. These are lecture notes so that we can start our self-assessment portion. Alright, here you go. I've already shared the screen with you. As you can see on your screen, it is page 54 of lecture notes, which I asked you in the previous lecture to just read it yourself. I assume that you have already read it yourself. If you haven't done so, please pause the video here, read the notes from page 54 to end of this, just before inheritance tax. Please read the notes so that when we talk about together here in this lecture, then you know what I am talking about. Alright? Let's start then. It says, first of all, notification of liability to income tax and CGT. Now this is just a theory portion. It is very, very important. This will just give you the dates, when to submit the tax, and this stuff. Alright, so this is just a self-assessment stuff which is very, very important, and it's just a theory. So it says individuals who are chargeable to income tax and CGT shall receive a notice to file a return from HMRC. Now every individual in the UK receives a notice from HMRC to file a tax return. Now what is tax return? Tax return is just a simple form where you have to state that how much income you have, what sources of income you have, do you have any capital assets which you have sold, and you have any capital gains which you have made, do you work for someone, or do you have any business, so stuff like that. So it's just a information where you will have to just fill the form either by hand or on the computer. So just fill the form, give the information to HMRC and send it to HMRC. That is just a calculation of the tax which you have to pay. Alright? Now it says after that, an individual who does not receive a notice. So if you do not receive a notice, then you do not have to just stay calm. You have to inform HMRC that I haven't received the notice. Then are required to give notice of chargeability to an officer of Revenue and Customs within 6 months from the end of tax year. Right? Our tax year is ending on 5th of April 2016. So our tax year is from 6th of April 2015 to 5th of April 2016. So our tax year is ending on 5th of April 2016. So within 6 months will be 5th of October 2016. So we must inform HMRC officer by 5th of October 2016 if we did not receive any notice. After that it says submission of tax return. Now what is tax return? I've already told you. It says tax return comprises of a tax form together with supplementary pages of particular sources of income. The return can be filled electronic or paper return. So there are two types of them. You can either download a form and just fill it and send it by post, by Royal Mail or whatever, and other one is just do it electronic, just to go on HMRC website and fill it online and send in the electronic form. All right. Now all the information which are relevant to tax, you can always check from official website of UK government, which is gov.uk. All right. So wherever you feel any problem, all the information which is a tax related to tax is given in the on the website, which is gov.uk. All right. However, you should be careful because the information which will be available on the website, which will be latest However, which we are studying now is not latest. It is relevant to tax year 15-16. Now the information which will be available on the website will be latest, so that won't be relevant for your exam. So please make sure before you go on the website, as far as this exam is concerned, please don't look at the website, because you are not good enough on the exam to go on the website. I was just telling you that after passing your exam, if you ever feel knowing about taxation, you can always go on the website of gov.uk, where you can search all the taxation stuff, which is obviously free of cost. Alright, so submission of tax return, it says, what is the tax return? We already know it, and it says time limit for submission of tax return is later of 31st October after the tax year and 3 months after the notice of return. Now, if you receive a return of notice, then you have to submit the tax return, and it is later of these two. 31st October after the end of tax year, so 31st December after the end of tax year. Our tax year is ending on 5th of April, so 31st December will be 31st December 2016 for our current tax year, or 3 months after the notice, or a notice to file the tax return. So it is later of these two. Then it says the time limit for submission of tax return is later of. Now when you should submit the tax return is 31st January after the end of tax year and 3 months after the notice to file the tax return. So it is later of these two. Alright. So what you have to do is, if you are submitting the return paper based, then date is 31st October, and if you are doing it electronically, then it is 31st January. However, it is later of 3 months in both cases. So it is later of these two. Then it says record keeping, how long you have to keep the records. It says all records, records means receipts and pay slips and all that, and the tax records which you have already paid. So all records required to enable them to make and deliver a correct tax return must be retained until 5 years after the 31st January following the tax year, where the taxpayer is in business. So if you're a businessman, then you have to keep the records for 5 years. Alright, or 1 year after the 31st January if you are an employee. So if you are an employee, then you have to keep the records for just 1 year. However, if you are an employer or a businessman, then you have to keep the records for 5 years. The maximum penalty for each failure to keep the records is £3,000. So if you do not keep the records, then the penalty is £3,000. Alright? That's the record keeping. And after that it says correction amendments in tax return. Now you can make changes. If you have done any mistake, you can make changes into the tax return. Alright? Now how long you have to make the changes? It says the return may be amended by HMRC. If HMRC has done any mistake, they can amend it and amend to correct any obvious errors or omissions in the tax return. The correction must usually be made within 9 months, and that's for HMRC. So HMRC has got 9 months. However, how many months do we have as taxpayer? We have 12 months. After that, it says compliance check on returns. Now, although you have declared to HMRC that you have that many income on the tax return, but HMRC has authority to check it. So an officer of Revenue and Custom has limited period within which to commence compliance check on the return or amendment. The officer must give written notice of his intention by 12 months after the tax return filing date. If you file the tax return and you have told HMRC you have that many sources of income and that many capital gains, now HMRC officer has authority to check that return. So he will come to your house and he will say, just show me the receipts which you have declared on tax return. Alright. However, he has limited time of 12 months after the date of submitting file return, a tax return. So say for example, if you have submitted tax return on 1st of January, then he has got time up till 31st December, that specific year, because he's got 12 months. After that, it says discovery assessments. Now, if an officer of HMRC discovers that income of profits have been omitted from assessment, so for example, if you have misstated in the tax return, then HMRC officers may want to do the discovery assessment. Like an assessment has become insufficient, or that any relief given is excessive. Say for example, if you have given an excessive relief, your relief was, say for example, £5,000, but you stated at £10,000. So like that, if you have done any such mistake or error, an assessment may be raised to recover the tax lost. Then HMRC will determine how much tax has been lost, then they will try to recover it from you. The normal time limit for discovery assessment is 4 years after the end of tax year, but it may be extended in certain circumstances. It may be extended to 2 years with the tax lost due to deliberate understatement. So if you have made any fraud, if you've done any fraud, then this period will be extended to 20 years and may be extended. Alright, on the next page, if you come, it is determination. Now, if notice has been served on taxpayer to submit a tax return, but the return submitted by the return is not submitted by the filing due date, and HMRC officer may make a determination of the amount liable to income tax and CGT of the tax due. Now it says there is a mistake in the notes. It says there's a mistake in the first line where it says, but the return is submitted by the due filing date. So please write it down as, but the return is not submitted by the due filing date. So if you have not submitted the return by the due filing date, then the HMRC will determine how much tax has been lost, then he will recover from you. Such a determination must be made by the best of the officer's information and belief, and is then treated as if it were a self-assessment. So say for example, if you did not submit the tax return, then HMRC will say, I will make your self-assessment. So HMRC will assume that he is you, then he will write down, he will fill the tax return, he will fill your tax return. Say for example, if you had, if you did not submit a tax return, then HMRC officer will sit down and he will fill your tax return. Now just think about it, that HMRC officer is filling your tax return. He might write source of income, whatever he feels right. So say for example, if you are working for £2,000 a salary, then if he thinks you are earning 2,000 or more than 2,000, so he may write 10,000. So you never know about them. So it is always better to submit your tax return. If you do not do that, then HMRC officer will submit your tax return and they will fill out whatever they want. So they might write it down that you are earning £50,000, and then you will have to pay tax on £50,000. However, if you then in the future, if you think your earning is not that much, then you will have to write to HMRC that HMRC officer has submitted my tax return, but that's not true. I mean, my income is less than that. Then HMRC will say, all right, okay, then where were you before? Why didn't you submit the tax return? Then you will say, all right, okay, I will declare my income now. Then you will declare the income and you will pay tax on that. So that's what it says, that the amount liable to income tax and CGT of the tax due, such a determination must be made by the best of the officer's information and belief, and then treated as if it were a self-assessment. This enables the officer to seek a payment of tax, including payment on account for the following year, and to charge interest. The determination must be made by 31st January, which is approximately 34 months. Then after that it says appeals. Now there are two kinds of appeals which you can do. Appeal for, first of all, it says appeal for direct taxes, and then it says appeal for indirect taxes. Now at this level, I hope that the difference between direct tax and the indirect tax. Direct tax is simply a tax which the HMRC collects directly from the taxpayer, whereas indirect tax is a tax which you don't pay to HMRC directly. You pay someone and then they pay to HMRC on your behalf. Alright, so it says appeals to direct taxes are made first to HMRC. HMRC will assign a caseworker and the taxpayer may be asked for an internal review. HMRC will carry out the review within 45 days, so they have 45 days to review it. And after that, taxpayer must accept the review decision or he may appeal to tribunal within 30 days. So if they agree, then they're fine. If they do not agree, then they can go to the tribunal within 30 days. Alright? And as far as the indirect tax is concerned, you can go directly to tax tribunals. However, tribunals hearings are of two types: first tier tribunal and the upper tier tribunal. Now, the complex cases, it says, a case is allocated to one of the case tracks. Now, complex cases are heard by upper tribunal. Complex cases which will involve lengthy hearing and complex evidence will be heard by a upper tier tribunal, and all other cases are heard by the first tier tribunal. Now you know about tax evasion and tax avoidance. One is legal, another one is illegal. Avoidance is legal and evasion is illegal. After that it says penalty on dishonest conduct by a tax agent. Now we are tax agents, we are tax advisors. After finishing this exam, you might be sitting in your office and people will be coming to you to seek tax advice. If you do not act professionally, and if you are proved to be involved in a fraud, then the consequences are very, very bad. That's what it says. HMRC can investigate dishonest conduct of tax agents and apply a penalty of up to £50,000 where there has been dishonest conduct and the tax agent fails to supply the information of all documents that HMRC has requested. So you must act professionally and you do not involve yourself or your client into any fraud, because the consequences are very, very bad. Alright? And after that it says, if client intend to evade the tax by providing false information or concealing an information, then the tax agent should advise the client to disclose information with honesty and integrity. The tax agent must not be involved in tax evasion activities of client and must disengage from such a client. Now this one, penalty on dishonest conduct by a tax agent, please make sure you write it down as very, very important. This is very, very important. Now I will tell you a little thing about it, how important it is. Almost every sitting, out of 10, 9 sittings out of 10, it will be examined. If you look about past 10 exam sittings, it is examined in almost every sitting. So if you pick last 10 exams, out of then 10 exams, it will be examined. It would have been examined in 9 exams. You can check the past papers. However, it will be examined for just about 5 marks. So even if it is 5 marks, then still it is good because you are getting free marks. All right. Now it will be examined in different context. It won't be examined straight away. It won't give you. It won't just ask what is the penalty if you are involved in misconduct. So it won't tell you straight away. But this portion which is relevant to ethics, this is very, very important. And as you know, in each and every exam of ACCA, ethics is very, very important. So is this one. So please make sure you mark it as very, very important, and you know about it as well, because it will be examined, and as it has been examined in every sitting. After that, it says payment of income tax and capital gains tax. As far as income tax is concerned, first payment on account is made on 31st January in the tax year. Now our tax year is from 6th of April to 5th of April, 6th of April 2015 to 5th of April 2016. Now during the tax year is 31st January 2016. That is our during the year. So first payment will be made on first payment on account will be made on 31st January in the tax year, which is 31st January 2016 in our case. And after that, 31st July after the tax year, that will be second payment on account. So we'll make second payment on 31st July 2016 in our case. And the last payment will be made, which is final balancing payment, 31st January after the tax year. So the last payment will be made on 31st January 2017 in our tax year, which is 15-16. Alright? Now what would be the balancing payment? Now if you think about it, if you think about it, they are saying that first payment will be made on 31st January during the tax year. Now if we are paying during the tax year, how would we know? Because we haven't calculated the tax yet. How can we pay tax before calculating it? Now it says in the notes, payment on account, a relevant amount would be the previous year's income tax plus previous year's class 4 NI minus previous year's tax at source. So that is the formula to pay the first pay the payment on accounts. So there are two payments on accounts. First is during the tax year, 31st January during the tax year, and the second one is 31st July after the tax year. Alright, and we will take 50% of relevant payment it says just beneath that. And the final payment, the formula to formula to pay the final payment is also given to you, as you can see in your notes. Now, interest on late payment is 3%, as you can see here, and it is a standard interest rate which you will see in the in the paper. However, as far as late payment is concerned, late final payment is concerned, then the penalty is 5% if it is late up to 5 months, and if the payment is made, if the final payment is paid late, then there is a penalty of 10% if it is paid between 5 and 11 months. So up to 5 months, if the final payment is up to 5 months late, then it is 5%. If it is from 5 to 11 months, then it is 10%. And if the final payment is paid late, then there is a penalty of 15% if it is more than 11 months late. Alright, so these percentages are very, very important. Please make sure you learn them. Repayment of overpaid tax and repayment supplements. If you have paid extra tax, if you have paid some extra tax, then HMRC will pay you back. HMRC will pay the tax back to you. Alright, that's what it says. Repayment of tax. Now, if the tax has been overpaid, then the HMRC will repay you the tax. However, the interest the HMRC will pay you will be 0.5%. Alright, now if you have less paid, if you have underpaid, how much the tax rate was? If you have underpaid to HMRC, the interest rate was 3%. However, if you have overpaid, HMRC will pay you back just 0.5% in interest. Now, the payments by installment, it says, usually CGT is paid. CGT is usually paid 31st January after the tax year. That's the date to pay capital gains tax. But CGT may be paid by installments if the consideration and disposal of asset is received over the period in excess of 18 months. Say, for example, if you have sold an asset, but the buyer hasn't paid you all money in cash. So he said, I will give you in installments. So if the installments are in excess of 18 months, then the tax paid on that, capital gains tax, will be paid by installments. You can pay by installments. In such cases, installment may be paid over the period that the consideration is received. So you can pay as you receive up to the maximum of 8 years. Alright? The amount of installment must be agreed by HMRC. Now, the CGT may be paid by installment if the disposal of an asset is by way of gift, but the gift relief is not available. Alright? Then it says CGT may be by installment if the gift of the asset must either be land, shares of the quoted company in which the donor had control before making the gift, and the shares of a quoted company. So you must read this one as well. So CGT may be paid by installments if the disposal of an asset is by way of gift, but the gift relief is not claimed, and the assets must be these ones: land, shares in an unquoted company, and shares in a quoted company where the person has a control. Alright? After that, it says the installment will be paid as 10 equal installments starting from the normal due date. An election for the installment must be made by taxpayer before CGT becomes payable. So it must be paid in 10 equal installments. The penalty for late filing is if the tax is up to 3 months late, then the penalty is £100. The tax return is late. It's not tax payment. Tax return is late up to 3 months, then £100. More than 3 months and up to 6 months, first £100 plus £10 per day between 3 and 6 months. And if the return is late more than 6 months up to 12 months, then it would be greater of 5% of tax liability and 300. And if the tax return is late by more than 12 months, then it will depend on the type of conduct. Now, if you have been careless, then it would be greater of 5% of the liability and £300. And if you have been deliberate but you haven't concealed, then it would be 70% of tax liability and 300. It would be greater of these. And if it had been deliberate and concealed, then it would be greater of 100% of tax liability and £300. Alright? Now it says after that, it says penalties for error and late notification. Now there is a common penalty regime for that. there is a common penalty regime for errors and late notification of tax returns, including income tax, CGT, and ICs. Penalty range from 30% to 100%. Now the penalty rates which are maximum are given to you below, so please make sure you read it. These are just the things which you have to remember. Alright, just one thing where it says minimum payment of penalties, it says unprompted and prompted. Please make sure you try to differentiate between these two. It says an unprompted disclosure is one made at the time when the taxpayer has no reason to believe HMRC has discovered the error. Alright, so before you know that HMRC has known it, that is called unprompted. Whereas prompted would be that when you know that HMRC has known our conduct, then you tell HMRC about your conduct, then that would be prompted. Alright, so obviously you would appreciate the fact that when it would be prompted, then you will have to pay more tax, whereas when it is not prompted, then you will have to pay less tax. Alright, after that page, from page 59, there are some questions. I assume that you have already done it. If you haven't done it, please make sure you do them, because these are exactly like same ones which we have already seen in previous lectures. Even if there is some difference, then it is just minor and the answer was given anyway. Alright, that's it for our capital gains tax. We have already finished capital gains tax and our self-assessment portion, which is very, very important as far as the exam is concerned, because it is theory. In the next lecture, we will see our third portion, which is inheritance tax. And till then, goodbye and see you later. Thank you.